Let's bring in BMO Wealth Management Chief Investment Strategist Young Ma. Thank you for joining us. Did you hear anything big as far as market implications, policy implications from Fed Chair Powell?
Well, I think it was pretty much down the middle in his summary statement, talking about the need to bring inflation down more, but also the lagged effect of the interest rate increases have already happened, and also some of the strains in the banking sector, which perhaps might slow the economy and bring down inflation more than anticipated. So I think the summary was a little bit down the middle. I think his emphasis on the labor market and those alternative measures, especially the vacancies and how much they're focusing on that now, I do think that adds a tint of hawkishness to the commentary that would otherwise be down the middle. And also, again, the reiteration of the 2% target and how much the Fed is committed to that, really hammering that in. I do think that the Fed is looking at its dual mandate and saying that we already have maximum employment, and now the question is price stability. So really a heavy emphasis on price stability.
Yeah, what stood out to me, and I mentioned this to Steve Leisman a few moments ago, is what he did not say. He did not use it as an opportunity to tell the markets that there's still a lot more work to do on inflation, as we've heard from some of the other Fed speakers this week, including Lori Logan, including Michelle Bowman, Fed Governor Jim Bullard. So the fact that he did not do that, I think to your point, makes it a very down-the-middle kind of message. So what do you do as an investor not knowing what happens in June and beyond?
Well, yes, that's right. There is that element of being down the middle because, as the Fed said, as Chairman Powell said, with all the interest rate increases that have taken place already, they can kind of afford to wait and look at the data, or at least that's Chairman Powell's belief. Now, what do investors do? I think the market is really trying to look past the slowdown and really trying to look past the challenges that the economy faces and the recalibration to the higher interest rates. But it's not an easy task, especially when you get news headlines, as you mentioned today, that maybe the debt ceiling negotiations have paused or that the banking strains might continue longer than people are anticipating. I do think it's a time where, it calls for not being too aggressive in the marketplace here. And there's already a lot priced in terms of some of the positive news that's taken place recently.
Hey, Young, as for tech and the way it's contributed to our year-to-date gains, a lot of discussion today about I guess what B of A would call a baby bubble in AI as the market tries to wrestle with valuation and long-term potential. I just wonder whether you think the market's leaning too much on it, and not just U.S., by the way. It has huge implications for example, why the DAX is at a record high.
Yeah, the market is leaning very heavily on the tech sector. There's no doubt about it. That's where the enthusiasm is. That's where the perceived stability and growth is. I don't know in terms of whether or not we could say there's a mini bubble in AI. I think there's such potential there that it's definitely too early to make that call. But certainly a lot of enthusiasm is taking place in the tech sector, and that narrowness of the market presents a risk itself.